Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of Yasho Industries Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference to Parag Jhaveri, MD and CEO of Yasho Industries Limited. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everyone. On behalf of Yasho Industries Limited, I extend a very warm welcome to everyone for joining us on our maiden call today. On this call, we are joined by our whole-time director and CFO, Mr. Yasho Jhaveri, Mitesh Chheda, Chartered Accountant, who is our Chief Accounting Manager, and SGA, our Investor Relations Advisor. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on Stock Exchange and on our company's website. Since some of you may be hearing us for the first time today, let me give you a quick snapshot of our company, and then Mr. Yash will walk you through the financial performance. Yasho Industries is a Mumbai-based specialty chemical manufacturer which was incorporated in 1985. We are manufacturing specialty chemicals in 5 business verticals, that is food antioxidants, aroma chemicals, rubber chemicals, lubricant additives, and specialty chemicals. We have over 148 products across these 5 business verticals. We have 3 manufacturing units at Vapi, location based in Gujarat. In the last 3-4 years, we have expanded our capacity from 6,000 metric ton to 11,000 metric ton per annum. This expansion was primarily to suffice ongoing demand into rubber, lubricant, and specialty chemical segment. Our plant facilities are designed to be multi-purpose plant, which give us an edge to be flexible with market demand. We are Tier 1 or Tier 2 supplier for many major MNCs customers like Colgate, Adani Wilmar, SH Kelkar, Kemin, Continental, Michelin, Fiat, MRF, Apollo Tyres, JK Tyres, Indian Oil, HPCL, Palmolive, Wacker, Lanxess, Huntsman, and many more. We are well qualified with respect to certification, experience, technical expertise, and capabilities. We have emerged as a long-term sustainable partner for many of our partner companies. We have a presence in more than 50 countries, primarily in US, Europe, South America, Asia, Australia. Of our total revenue, exporting income contributes around 60%, whereas the balance 40% is from the domestic market. We have registered 36 products for REACH certificate, which enable us to qualify for export in European market. We believe there is a huge opportunity in that market. We have recently opened an office in the Netherlands to increase its reach in the European market. We are delighted to report our quarterly and 9 months performance in terms of volume, sales, and profitability, which has been driven by improved product mix and the price realization. Total revenue for 9 months FY22 was rupees 438 crores, an increase of 69% on year-on-year basis. On a year-over-year basis, our sales volume grew by 49%, and above our EBITDA grew by 90% in 9 months of FY22. The company has completed its capacity expansion of 1,800 metric ton through debottlenecking and now strive to improve margins beginning this quarter. Our current capacity utilization is nearly 90%, and we will be operating at the optimal levels in FY23 also. To propel sustainable growth, the company is evaluating various modes of capacity expansion for future growth as we foresee a healthy demand for our value-added products. The Indian specialty chemicals companies are poised to grow significantly in mid or long term as global manufacturers are looking for an alternate and sustainable supplier. This has led to a steady increase in demand for Indian specialty chemicals players like us. Now I hand over the call to Mr. Yasho for giving you a glimpse on financial performance. Yash.
Thank you. Good afternoon, everyone. Q3 and 9-month FY 2022 has been a strong quarter for us as all of our key products witnessed robust demand. So just give you a few highlights on the Q3 FY22 figures. The total revenue for Q3 FY22 stood at 166 crores, a growth of 71% on year-on-year basis. Export market contributed around 60%, whereas domestic market contributed the remaining 40%. Total sales volume for the Q3 stood at 2,953 metric tons as compared to 2,175 metric tons same period last year. This was primarily higher due to strong demand for value-added products. EBITDA for the company stood at 28.2 crores Q3 FY22 with a margin of 17%. Net profit for the quarter stood at 14.6 crores, a growth of 129% on a year-on-year basis. 9 monthly for the FY22, total revenue stood for 9 monthly stood at 437.7 crores, a growth of 69% on year-on-year basis. Total sales volume for the 9 months FY22 stood at 8,051 metric tons as compared to 5,387 metric tons same period last year. Now to give you the revenue contribution on the 5 verticals. Aroma chemicals contributes 14%, food antioxidants contribute 13%, rubber chemicals contribute 36%, lubricant additives contributes 13%, and specialty chemicals 24% of the total revenue. EBITDA for the company stood at 75.7 crores for 9 monthly, a growth of 90% on year-on-year basis with a margin of 17.3%. Profit after tax stood at 39.2 crores for 9 monthly against 12.4 crores for the corresponding year 21. With this, I conclude the presentation and open the floor for further discussion. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepthi Kothari from Kothari Securities. Please go ahead.
Thank you for the opportunity, sir. My first question was that what are the our key raw materials for each chemical vertical and what is our sourcing strategy?
Well, for the food antioxidants, the key raw material is the hydroquinone and tert-butyl alcohol. While for an aroma chemicals, key raw material is a clove leaf oil which we import from Indonesia and Madagascar. For rubber and lubricant, we have many raw materials which are common. So major raw material is the carbon disulfide, which is locally available. different amines which we buy from local manufacturers, and diphenyllamine is another raw material which we import. Specialty chemical has similar raw materials like a food, also from lube and rubber, because chemistries are similar, but the end applications are different. So these are the major key raw materials for us.
Thank you, sir. So can you let us know about our contract terms with our suppliers and clients and how changes in prices are passed on?
Well, for the raw materials, we have a 3 months or 6 month contract with our supplier. In turn, also we have a contract with the customers either quarterly or 6 monthly, and many customers are on the spot basis.
Okay. So since you did 440 crores for 9 months, at what revenue will you close FY22?
I think we are confident that we should be close above 550 crores somewhere.
Okay. And so what is your guidance for FY23?
I think it's a bit early. We would like to give a guidance in the last quarter results, that is sometime in early May when we meet again for the 23.
Okay, that was really helpful. Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Thank you for the opportunity and congratulations on a good set of numbers, sir. My first question is, you mentioned that we are running at 9% capacity. So is this on the expanded capacity are we talking about?
No. See, this is tricky answer, because when we talk about a full capacity which is installed in month of December, but what happened, there is a partial capacity already came in, maybe for one equipment or certain reason the full capacity not installed. So when we talk about 90%, it's based on the previous capacity and some capacity from the new expansion what we're talking about. It's always mixture.
So what is our total capacity in metric tons, if you can quantify that for me, sir?
Now it will stand at 11,000 metric ton.
11,000. And what was our production in Q3?
Q3 was 2,953 ton.
2,953.
Yes.
Right. So my second question is that given now we are already at around 3,000 metric ton per quarter, and then we are safe to assume that this 11,000 will also get exhausted very soon. So how do we plan to increase volume starting FY23?
See, Ayush, here what is happening that because of the number of product what we have and also the fungibility of the plant, the capacity design on a particular product, and now we are producing a different product than what we designed. So that is giving us a little increase in the production. Number two, with our continuous R&D, continuous R&D efforts, we should be able to change the process, which is also helping us to improve the productivity of the plant. So this capacity was designed, 6,000 was before 2018, and then we have increased the capacity for particular product. But in that last 4 years, we have also done a lot of innovation. R&D has helped us to, optimize the condition, reduce the time cycle. So with that, we could be able to achieve little higher than what we have, the installed capacity. Now, we are confident about the further growth because a lot of new value-added products have been coming, and with the new additional capacity, we just kicked in from this last month, January, and with that, we are expecting further growth in 23.
Right. So 10-15%, maybe 20% can happen from there, but starting FY24, we will need new capacity. So what are we doing about that, and what are our plans, sir?
For FY24, we are working into the new greenfield project, which is into the final stage at our end. And once we finalize it, we will notify to the the board and also to all the investors.
Right. So if I know this may not be public, but I see that we have filed the environmental clearance. We have filed the environmental clearance on with the authorities. So if you can throw some light, what are we thinking about the project and what could be the potential size or.
That's what I'm saying. I'm not keen to give you any further information on that, purely because we have made an application, but we haven't got the approval yet. Till we don't have a necessary approval in the hand, it doesn't make sense to announce the project. And you know that the EC is a very, very crucial aspect of the project.
Right. Sir, just one thing, like after we receive approval, generally how much time does it take to, start 18, 24 months or less than that? How much time will it take for us to be ready with the expansion?
Once we get the permission, I think so within 18 months we should be able to start the production.
That's really good to know. So my final question is on the customer side. If there is any new addition, or if you can throw some light on the rubber chemicals, because that has seen huge growth, and even lubricants, and so has specialty chemicals. So all three segments are growing really well for us. So if you can talk about the demand scenario, is this because of new customers? Is it because of existing customers? Are the products high in demand right now? So what is driving this growth for us right now?
See, the growth is driven by, as you said, very well said about our specialty segment into the rubber, lube, and various other applications which we call the specialty segment within Yasho, which are basically application into the industrial segment, which is growing very well. The company, we have added a couple of new customers in all the three segments. We are trying to reach to the more customers with the help of our new subsidiary in Europe, wherein we can reach out to the smaller user, which we are missing it out, or sometimes we have to divert them to some distributors, friends, So that is what we intend to do here. Also, the China Plus is helping us a lot to grow the market. People are looking an alternate source. And when you look at for the alternate chemistry outside China, has to be India, or you go to Europe, and Europe is very, very, very expensive. We see the strong demand for the product, and we are very confident that companies should be able to sustain the current growth trajectory.
That's really good to know, sir. Wish you all the best, and that's it from my side.
Thank you.
Thank you, Dan.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Priyanka Shah from NK Securities. Please go ahead.
Thank you for the opportunity, sir. So my first question is, can you explain the recent changes in your lubricant and specialty vertical product with respect to overall product approval cycle, current demand for existing products, new products, etc.?
See, in the lubricant segment, we are working into the three verticals within lubricant. One is an antioxidant, second is the corrosion inhibitors, and the third is the friction modifiers and anti-wear, which is combined. So these three segments. Out of that, the lubricants and is doing very good. Friction modifier, we take a little longer for an approval, but that has been picking up quite well for us. And corrosion inhibitors, we are hoping which will grow more and more, because in India we talk about an ethanol blended fuel, which our product goes into that segment, and we expect a better growth in the near future also. As regard to the specialty segment, our products goes as a stabilizer for monomers into the acrylic acid and methacrylic acid for the methacrylic manufacturing. Also as a stabilizer for epoxy resins and unsaturated polyester resins. And third is the thermoplastic urethane, where it acts as a polyol. We see that the demand for thermoplastic TPUs are growing very well. Also, it has got an application into the automobile and also into the oil drillings and many other applications. That segment is growing reasonably well. Besides that, also the stabilizer for epoxy resin is growing, and we expect that to continue the growth.
Okay, sir. And what are the key entry barriers in your business, and also highlight on our key competitors?
Well, when you talk about the competitors for the food segments, we have Camlin Fine Science, we have Clean Science, we have globally Solvay and Eastman Chemicals. So they are the four major competitors for us. In an aroma chemicals, competition comes from manufactured from Indonesia, because the clove oil is grown mainly over there. India we have, but they are into the non-organic sector. Those guys are in the rubber segments. Our immediate competition comes from the no-seal, where we have about 4 or 5 products common with the no-seal. Besides that, we have a competition from Lanxess Europe, Performance Additives Europe, then the Vanderbilt in the United States, and host of Chinese players there is into rubber. Lubricant segment, there is a company called Sunsil in India, which is one with whom compete. Otherwise, it's basically BASF, Lanxess, Vanderbilt. They are the major competitors. There is not much competition coming out from China. And into special segment also, the competition mainly comes from Europeans and American producers.
Okay, so one last question. So can you give us some details of the Greenfield project?
As I just said a few minutes ago, it's into the drawing board. It's into the final stage. We are waiting for a certain approvals from the government, and once we have approval in hand, we'll make an announcement.
Okay, sir. Thank you so much, sir.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ashish Singh, an individual investor. Please go ahead.
Good afternoon, sir. Very congratulations on the excellent number. Just wanted to know if you can set some colors to the debottling of the different plants, if any action is being you are taking, and by what time it can be achieved, and how much revenue percentage for the sales it will increase.
Ashish, here what we done debottling into our specialty segment, couple of product line, and also into the segment of rubber and lubricant side. We done the debottlenecking. That will help us to achieve better sales in this quarter and also into the coming few quarters. That will help us. It is, as you know, the today's trends is quite a bit inflationary. So I would not like to give you numbers that why the company will grow, but we are expecting a sustainable growth in a near future till the time we come with the Greenfield project. We are confident that we will be able to maintain the kind of growth what we have. I won't say that the way we grown in the FY22 we will have same number of growth in next year. That is impossible since we don't have capacity. But we will have a moderate growth for 22-23.
Okay. Sir, any advancement we are doing on the R&D part?
Yes, we are increasing the bench strength into the R&D, and we intend to increase our R&D spending from this quarter onwards.
Okay. Can you give some hint on like which products are main concerned on this R&D?
Well, basically we, as you know, the focus areas industrial segments, that's lubricant, rubber, and the specialty. So R&D will be also focusing to that direction only. We see there's a big gap, supply-demand gap in the number of chemistry, and we are looking forward to tapping the same.
Sure. I wish you all the best, sir.
Thank you very much, Ashish.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nisha Chawla from RF Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, can you please highlight on the growth over recent years and how are we planning to increase the same over next 5 years?
Okay, the last 3 years growth is purely because we added a lot of capex. As you see that from 18 we came with an IPO and we had about 40 crores brownfield project, and further we did capacity expansion as in Unit 3 and the recently we did the debottlenecking. So we have increased our capacity from 6,000 metric ton to today 11,000 metric ton. So that should suffice and for 1.5 year growth. As we spoke recently about the greenfield project, we are working on same, and we will make a necessary announcement once we have all the required approvals from the government. And so we expect a further growth from somewhere in 23, FY23 or 24.
Okay, sir. That is good to know. And sir, my next question is around on the REACH certificate. We have around 35 products registered for REACH certificate. So how much did we spend on it?
We have spent until about 25 crores so far, and which is reflecting in our balance sheet as a non-tangible fixed asset.
Okay, sir. Thank you.
Welcome.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question may press star and 1. The next question is from the line of Yogesh Tiwari from Arihant Capital Market. Please go ahead.
Good afternoon, sir, and thanks for taking my question. I had one question on basically the debt. What is the debt in the books as of now? The debt and the cash?
I think long-term debt is about 40 CR, 45 CR something. 45 CR. Short-term is about 100 CR.
Okay, so if I can continue on that, is there any debt reduction plan going forward?
Not really, Yogesh, honestly. As we are working on our new greenfield project, so we are not looking into it. Otherwise, definitely, we could have deployed all our cash what we are generating to repay the debt.
Okay. And lastly, it's like what would be the concentration of your top 10 clients to revenues?
We don't have any customers who has a revenue more than about 5%.
So you don't have any customer more than 5% of revenue?
Yes.
Okay. Okay. Thank you very much for the answer. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Anupam Agarwal from Lucky Investment. Please go ahead.
Yeah, hi sir. Good afternoon. Thank you for the opportunity. Sir, I just wanted to understand on the EBITDA per ton, given we've had a 80% kind of growth this quarter, how do we see that going forward with all the capex that comes in, let's say either from the brownfield or from the greenfield? 2-3 years out, how do we see the EBITDA per ton number?
Well, let me be honest here. Anupam, that there's a lot of inflationary pressure also. So, if I want to talk about the long-term sustainable numbers, would be in the range of 70 to 80,000 metric ton per, EBITDA per ton.
Okay, and with the raw material inflation that we've seen this quarter, our gross profit has, very well sufficed or given us cushion for the increase in the raw material prices. What percentage of increase have you witnessed in this quarter in terms of raw materials, and what kind of price hikes have you taken?
See, I'll tell you, in the last quarter, we had some unexpected price increase in couple of our key raw materials. there was a two instances. Number one, that the fuel cost suddenly jumped up. That's the gas and the coal cost. That has increased the cost at our supply, and in turn we have to accept it. Those we could not account it because it has happened between the quarter. But now we know that what cost has increased to us, so we could pass on that. We could, when we negotiated for Q1 or the 6-month prices, we did consider those costs into it. We hope now that the fuel cost will increase. We see that the raw material prices are getting stabilized. It's not yet started reducing, but I can see that it's started stabilizing. The kind of the prices we are getting from our suppliers are stable, or maybe see a very, very slight reduction. So that's so we are confident that the cost will not further increase on a raw material side, but on a fuel side we keep our finger crossed, because which is beyond our control. We can't even negotiate that cost with the government.
Understood. So on a long-term sustainable basis is around 70 rupees, 50 rupees a kg realization sustainable?
70 to 80 rupees a kg should be sustainable.
Okay, got it. Sir, just on the greenfield, I understand you're not willing to give out further details. Just want to understand in which segment of business are we looking to expand volumes?
Well, specifically it will be more into the lubricant, rubber and the specialty segment.
Okay. Understood. So last question from my end, if you can just on a pegging order give us an idea of which business gives us better margins of the 5 different segments. Rank them in 1 to 5 if you can.
Sorry, can you come again, Anupam, please?
Sir, if between the 5 business segments, can you give us an idea of which is the best business that gives us the highest margins, if you can rank them from 1 to 5?
I think I will not like to pinpoint each segment here, but I can say that that our industrial segment, that's the lubricant, rubber and the specialty is giving us a better margin compared to the food and aroma.
Yeah, got it. Thank you, sir, and all the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Pradeep Singh, an individual investor. Please go ahead.
Hey, thanks for giving me opportunity. I just want to ask, like, how much our revenue comes from distribution channels?
Good one. In a domestic market, about 10% revenue comes from the distribution channel. In an export market, about 60% revenue comes from the distribution channel.
All right. Thank you. That's all from my side.
Yeah.
Thank you. The next question is from the line of Nikhil from Perpetual Investment Advisors. Please go ahead.
Yes, thank you for the opportunity. So I just had a question around the greenfield facility. Since we are already levered, how do we plan to fund this capacity?
Nikhil, I will come back to you all this thing once we announce it. Let me have put down all the information together also into the one go, rather than as of now we are not ready to answer this question. We will answer it once we announce the project.
So can I continue on the previous participant's question?
Sure.
Around your channel of sales being around distributors? So how has that moved in the last few years, and how do you expect it to move going further? I mean, 60% of the sales come from distributors in exports. Does that come down, and will that lead to an increase in margin?
Yes, that is what our plan is, Nikhil. Yeah. Our direct sales was less than 20% before 3 years. Now it has gone to 40%. We have also, Europe is a big market for us. We have made an also investment to reach segment, which is allowing us to explore the market uninterruptedly. We have set up a subsidiary there as a stock point. It's a purely stock point, so we can give a delivery to the end users within a 7-10 days time, which is also the small quantity, like, at the one pallet minimum and up to the full truckload. So we do expect that our sales speed should improve, so the direct sales should increase in coming years. And if this trial is successful, we might look at also some other geography where we can have our own, the warehousing, and we can deliver to our customer.
Understood. And what is the difference in margin between both the channels? A broad idea is fine.
At least because margin difference should be about 5 to 10%, but then also you have to have your expenses. So net I can say about 5-6% we should gain more.
Okay.
In terms of margin.
And if looking at your current quarter's volume, that is around almost 3,000 tons, and your capacity at 11,000 tons, how do we expect sales growth coming in FY23? Would that be from a change in product mix? Am I right on that?
Yes, absolutely. There will be some change in product mix. The product, the certain product capex did based on certain product. Those products will kick in, and that should give us a better growth. Also the margin point of view. Not only top line, but also the bottom line.
Understood. No problem. Got it. Thank you. That's it from my side.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants to ask a question may press star and 1. As there are no further questions, I now hand the conference over to Mr. Parag Javeri for closing comments. Over to you, sir.
Hi friends, let me give some little bit insight about the chemicals. India is manufacturing hub of 70,000 plus chemicals, which can cater to wide variety of end users industry across the globe. Since specialty chemicals are value-added chemicals with multiple uses across industries, they will always find utility. We are focusing on improving our product mix to value-added product over the next few years, and will seize the opportunity that are unfolding to qualified player like us. With this, I conclude the call. If you have any other further queries, please contact SGA, our investor relationship advisor. Thank you everyone for joining us today on this call. Thank you.
Thank you everyone. Thank you.
Ladies and gentlemen, on behalf of Yasho Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.